Guys, I don't want to jump the gun, but I think I'm onto something. So for the last 3 months, I've been testing this strategy in different conditions, and it consistently showed profit in all the markets, even at the time when the United States had freaking presidential election. So let's wait until this deal is closed, and I will share my 3-step formula for how you can use this strategy right after watching this video. Any good price action strategy should include 3 basic steps. First step is to find a suitable setup. In other words, at what point do we basically start looking for an entry point into a deal? Second step is to identify a specific entry point. We need to collect as much additional data as possible, confirming that our setup will work as we want it to. And we will determine the specific point for opening a deal. And when all of these steps are completed, eventually the strategy turns into a set of rules that we can kind of place into a checklist. And if all the parameters are checking out, we can finally open a deal. But let's not forget that there is a third step, and this is the definition of the basic rules of the strategy, on which assets we will apply our strategy, which time frame and expiration time we will use, and which risk management strategy is most appropriate for our situation. In this video, I will share all 3 steps and explain the logic behind each of them. So after watching this, you can not only get a set of rules for entering the deal, but also understand why we need to follow these rules and how the strategy can be improved. But before that, I would like to thank all of you for the way that you support the channel with your likes, comments, and subscriptions. Thanks to this, the channel can continue to grow, and I have the opportunity to continue creating high-quality trading content. So thank you, thank you, thank you. But now, let's get me my vitamins ready, because it's winter and I definitely need them because I'm not feeling good. But after that, let's get down to business. Let's get started. So based on the results of my test, here are the basic rules that we will follow today. So first one, we will trade on real Forex currency pairs, avoiding the OTC pairs. I have a separate video on my channel with a detailed explanation on why you should not ever use OTC pairs. You can watch that one later, but in short, our goal here is to make money, and we do not want to make a generous donation to the broker. So next one, we will use a 5-minute time frame to find the setup and a 1-minute time frame to find the entry point. A bit later, you will understand why this is really important. Next one, the expiration time of trades will be longer than in my previous strategies. Now it's going to be 10 minutes. And despite the fact that I much prefer to use and work with 3-minute expiration time, now 10 minutes show themselves much better in this strategy. And as for risk management, of course, everything is determined by the level of personal risk tolerance. For me personally, this is going to be from 1 to 3% of my balance for each trade, and I allow only 1 martingale step in case of a loss. So now, let's move on to the juicy part, and let's talk about the setup. In fact, this strategy can be used with most key levels, but in order not to overcomplicate this video, for now we will focus only on the support and resistance. So most of my viewers already understand the principle of support and resistance, but under my videos with price action strategies, comments often appear indicating that the levels are subjective. And no matter how much I would like to say that this is not the case, when my students still send me screenshots of how they drew levels, I really quite often disagree and see mistakes there. So now, let's clearly formulate an objective set of rules that the level must comply with so that we can call it a valid support or resistance. First, it's important to understand what support and resistance are in general. So support is the level at which the price reverses and goes up because the sufficient number of buyers believe that this is a good price to buy. And resistance resistance, on the other hand, is the level at which the price turns around and goes down because a sufficient number of sellers believe that this is a good price to sell. In fact, trend lines, moving averages, and even Fibonacci levels also show us support and resistance levels, but they define the dynamic levels. And in this video, we are talking about the static levels. When we're talking about static levels of support and resistance, we see something like this. So when the price reaches the level of resistance, which is the number one on the top, it drops down, and when it reaches the support, it jumps back up again. Why does this happen? What is the logic behind it? So in this zone somewhere there are enough orders, so when the price reaches it, it triggers all of those orders, and that's why the price drops. And right here in the support zone there are orders for buyers, and that's why when the price triggers them, it grows. So you need to understand that all of those orders, they are not at just one place. It's not a dot or a thin line. You can see that support and resistance cannot be a thin line. So you can see that the price was 110.759 and 110.829. So this is around that zone, and the same situation with the support. And to all the levels in binary options, those are zones, not simple lines. And the second key moment that you need to understand, the more times the level worked with the price, the more possibility for it to work in the future. But it doesn't mean that it's going to work forever. At some moment, any level will break when one or the other side will dominate the market. In this situation, we see that both of those levels, they were kind of valid around 5 days. No, I'm lying. So 4 days, from 21st till 25th. Both of the levels worked stably, but then the price actually broke through the support level, and that means that the sellers got the control of the market and the price found a new price corridor, and there is a different story. So now that we have sorted out the base, let's determine how we will put our levels on the chart. But before that, I want to remind you that if you want to understand all the intricacies of chart analysis in binary options, you can join mine academy for free and get not only a trading course, but also support from me and your supervisor during the course of training. To join my academy, you simply text me on my Telegram, the link to which is, as always, in the description box down below. First step for us to find a valid level, a key level, is to get a bigger time frame. So for example, right here, we're working with 1 minute time frame, and that's how we are going to change it to 5 minutes. And with 5 minute time frame, we see that we need to get out, just zoom it out a little bit, and right here we can look at our levels. We need to find the level from which the price pushed at least 3 times, so worked with the level 3 times and proved that it was valid. So for now we can definitely see that from this level the price actually worked multiple times, and we see that the price worked right here for the first time. There was just a little drop after breaking through, then it grew, it worked again, and again right here, right where we are. So we see that 1, 2, 3, 4, 5 at least times we have the confirmation that the level is valid and the price is working with the level. Also, if we get behind the chart just like a little more in the past, and we see that this zone actually worked as a resistance as well, and that is also a valid point for us to see if it's a good level. If it worked as a resistance, there is a big possibility that the price will see this level as a support level in future, which happened here. So when we have all of those confirmations, only after that we can say that the level is actually valid. So our setup. This is a price return to the support or resistance level on a high time frame, and the price shows signals of reaction to the level, right? But there is a little nuance here. In this case, if we get it back to 1 minute time frame, we will definitely see that the price is actually reacting to this level. And if we can get a little look into the future, which we can do it now, we see that the price jumped upwards and the deal for an upward trend would be closed in black. But what can we do in a situation like this one? We drew our level right here on a high time frame, but when the price actually got to that level, we see that there are no signs that the price is going to do the reversal. We actually see a huge momentum from here and the breakthrough of this level. After the breakthrough of the level, we understand that the price probably going to go lower and we need to forget about this level. So first things first, we can just forget about the setup, delete this level from the chart and never think about it. But that's not what I do. As I say before, if the price breaks through the key level, if that actually happened with the resistance level or support level, the level is going to become something different. So in situation like that, we of course can enter into a deal for a downward trend, expecting the price to go lower. But in this case, the better thing to do to wait for the price to get back to this level, and it will retest this level. And from that point, we will try to find an entry point for a downward trend. Because after this retest, the most important and logical thing, what's going to happen is the price going lower. So two different types of setups. If the price gets to the level and jumps up again, and the second one, we need to remember about the breakthrough and retest and then entering into a deal according to the rebound. As a result, we have two setup options. So the first one is a continuation pattern. That is, the price returns to the level on a 5-minute time frame and rebounds in the same direction. And the second option is breakout pattern. The breakout of the level in 5-minute time frame and a retest of this level followed by a price movement in a direction of a breakout. Second option is of course more complicated, but in my experience such transactions have even higher win rate. So I think this technique is also worth mastering. Okay, we have sorted out the setup finally. So now let's see what confirmations we should collect before entering into a transaction. Okay, so when we found a great setup, so in this case we have the support level and potential reaction on a 5-minute time frame, we're getting back to a 1-minute time frame, and we're gonna work with this one. Here we need to collect all the confirmation for entering a deal. First things first, we look at price action. We are looking at candlestick patterns and how they react on the reversal point, and here we see a beautiful bullish pattern, and from that one the price is moving upwards. So of course we are thinking that most probably the growth of the price is going to continue. Next one, what we need to look at is how much power does the new trend has to continue moving price upwards. That's why we're going to use indicator RSI, and we're not going to use it as we use it usually, like a standard one which shows us overbought and oversold areas. We are going to use it to see how powerful the trend is. In this case, we see the situations. Amazing, chef's kiss, perfect. It shows us that in this point we had oversold area, but that doesn't matter for us. We need to look that the line of RSI is going to go over the line of 50, over the level of 50. And that's going to be an indicator that the trend is actually has enough energy and power to move the price upwards. Additionally, we need to get the confirmation, not even confirmation, we need to see what's gonna kind of stop us. So we need to see that from this swing high, we will probably have the really strong level where the price can reach this one and go down. Also in this level, we see that the price was moving, dancing around, and here this is not a really powerful level. Probably the price is going to go through it, but we still need to know it, because if it would be a lower, for example right here, we understand that probably the price is going to reach this level, and that's a bad idea to enter a deal only before the price is going to go over that level. In this case, we have this level quite high enough for us, and all we need to do is to wait for RSI indicator to go over the level of 50. And there you have it. On that candlestick, we're entering a deal because the RSI indicator is higher than 50. Having all the confirmation and the beautiful setup right here, we're entering a deal on this candlestick, the first one which broke the RSI level, the 50. We're entering into a deal for 10 minutes, and let's see what is going on here. So it was dancing around just a little bit, and then with the impulse movement it jumped higher, but then met some resistance right there on that level that we talked about. But that doesn't matter, because for our deal we have 1 2 3 4 5 6 7 8 9 10. So 10 minutes passed and we would be getting our money because the deal would be closed in black. With the line of resistance and deals for the downward trend is the same story. We have 3 touches. On the 4th one, the price got to the level and we see the reaction on that level. We are getting back to 1 minute time frame and looking at what we're having right now. So first of all, we're looking at RSI that shows us there is a good potential for the price to go lower. That's a strong trend. And also we have the bearish candlestick pattern, and this is bearish engulfing as well. Also, speaking of which, I have a couple of videos on bearish and bullish candlestick patterns, and in my academy for my students we have a cheat list with all the patterns that you can meet on the chart. So in this case it's quite easy. Bearish engulfing candlestick pattern, we have 3 red candlesticks, so we have all the confirmation for us to enter into a deal right here. And additionally, of course, we need to look at the levels that can somehow interfere with us, and we have this one, but it's quite far away and price probably is going to break through it, but you still need to look at it, because if it would be closer, then we would have to wait until the price is going to break through that level. In this case, we have a beautiful setup, so let's enter into our deal and see what's going to happen here. So of course the price broke through it. Nothing serious is going on here, so let's count. Bam, bam, bam. We need additional 2 minutes. 1, 2. So 10 minutes later, our deal would be closed in black. So let's summarize all the rules for this strategy. To open a deal for an upward trend, we are looking for a setup where the price reacts to the support level according to a continuation or a breakout pattern on a 5-minute time frame. After that, we switch to 1-minute time frame and we're looking at the confirmation from the RSI indicator, which should be above 50. We also get a confirmation in a form of a bullish candlestick pattern. And here we also need to check where the nearest level that may interfere with us. To open a deal for a downward trend, the opposite is true. We're looking for a setup where the price reacts to the resistance level with continuation or a breakout pattern on a 5-minute time frame. Then we switch it up to 1-minute time frame and we're looking at the confirmation from the RSI indicator, which should be below 50 this time. Then we get a confirmation in a form of a bearish candlestick pattern, and then we check where the nearest level that can actually interfere with us. All right, guys, I have my drink with me. I'm ready to work, so let's get to Quotex and start working with our strategy. And first things first, what we need to do, we need to get our platform ready. So we're getting expiration time 10 minutes, and amount of money that I'm going to use 3%. It's around $160 in my case for my balance. Then we also need to add RSI indicator. The only thing I'm going to change the levels to 50 for both of them, because I don't care about overbought and oversold area, because I only need this red line in the center. Also, what we need to do, we need to change the time frame to 5 minutes, and let's get started. Let's get cooking. So here we have absolutely nothing. What I'm gonna do, I'm gonna put all the levels right here, and as soon as I find a potential entry point, we will start doing the things. Okay guys, so on a 5-minute time frame, we have quite an interesting situation. We have a lot of times the price jumped through this level, and additionally we have the support level somewhere right here, and it works around this zone, even maybe a bit lower. Yeah, so from here, let's see what's gonna happen in 1 minute time frame. And on a 1 minute time frame, it looks quite good. RSI almost crossed the line of the 50. So now we're waiting for the next candlestick to be closed outside of this level, and then we can enter into a deal for the downtrend, because the price is going to go lower and lower until the level of support. But for now, we need to wait and see what's going to happen within the next candlestick. For now, it looks quite good, but let's wait. Okay, so we see that the price is not breaking through and not going down, so let's not waste our time and let's move on to other currency pairs. And we will come back here a little later when the price is going to break through the level. And I'm actually going to add a little notification when the price is going to reach that line. We will get a notification from this currency pair. We will get back here and see the situation. But for now, too early for that, so let's move on. Alright guys, so we are gonna enter into a deal for a downtrend right now. RSI is lower than the level of 50, and let's look at 5 minute time frame. What do we see here? We see that we actually have this level working through multiple times, and the price is actually going downwards. That's good. And if we look in the past, it also was like started right there, like it tested it. But in general, what we are interested in right now and scared of is the support level downwards. And I'm actually kind of scared that it's gonna go too fast downwards. I don't like that. But in general, we have all the confirmation for our strategy, and the deal is open for 10 minutes. What we're gonna do now, we are just gonna pray, because I'm afraid of that level is gonna be too close, because I didn't expect the price to go downwards so bad. But even if we reach that level, the price is still gonna slowly go upwards. Oh no, I had everything is happening, but it doesn't matter because we have this one. In any case, even if the price is gonna jump from this level, it's not gonna go back to that level too fast. So we are in general in a safe space. So let's see what's gonna happen in 10 minutes. Alrighty, so the deal is closed in black. So in general, everything worked just how we wanted to. The price didn't even reach the support level actually. And after this candlestick, I was freaking scared that the next one is gonna get to that support level. But it didn't happen, and everything works correctly and we got the money. In general, this strategy is actually really effective. But before applying it on a real market, make sure to practice it on a demo account. If you have any questions during the process, do not hesitate and text me on my Telegram or leave a comment in the comment section down below. By the way, as I said before, this strategy can work with other key levels, so click right there and see my analysis of all the key levels in binary options. And that's gonna be it for us for today. Thank you so much for watching, and I will see you in the next one. Bye bye.